What's up, everybody? Welcome to another edition of the Free Toaster Podcast. I am your host, Carlos Caro. I am live in the studio today, which is always refreshing and new. I'm here with Tim Lee, CEO of LendAPI. We did this about a year ago, Tim, over the internet.
Yeah.
It's a little more fun in person.
Yeah,
I don't know. What do
absolutely.
you think?
No, that's great. I can look
Yeah.
in the eye and there's no delays.
Exactly. It's fun. But we talked mostly marketing for about, 45 minutes,
Yep.
something like that. So I'm going to link to that episode so you all can check it out. And Tim, on the way into the studio, I was listening to our show from a year ago.
Oh, wow.
Just to like jog my memory, like
Sure.
what did we cover?
Yeah.
And the most memorable thing that stuck with me is you're building infrastructure for anyone to become a lender. And that includes marketing funnels, hosting models, all sorts of stuff. And over lunch last week, you mentioned that's taken on kind of a life of its own within kind of buy now, pay later flows. Can you talk more about that?
Yeah. So, when we first started, by the way, this is my second appearance on your show.
You're one of the few that
one
have
of the
come
few.
twice, so it's cool.
Yeah.
You're on the
Yes.
honorary list now.
Yes. I feel so proud. And I'm doing this live in person. We're in Washington, D.C., your home turf. I was just here last week on the Governmental Affairs Conference, meeting a bunch of credit unions. I'm back last night. I'm going to tell you, the weather has shifted.
A little bit.
180 degrees, right? It was snowing last week. And I feel like I'm in Southern California.
It's going to be high 74
Yeah,
today.
I'm sweating out there. So it's great. This
wild.
is perfect weather, actually.
7-day difference. But we were in the 30s with snow, and
Yes.
now we're sunshine and
Yes,
74.
literally 4 days ago, I was walking on snow. Today is like beautiful. But
You brought it with you.
yeah, thank you. But this entire point of self-financing, embedded finance, was really interesting to me. I built a couple of these platforms before. I sold a few, and the latest one, LendAPI, that I built with my partner Sam. I said, well, how do we differentiate ourselves, right? What do we need to do to say, well, this is not just a good old LOS, origination system, decision engine, loan management system. How do we break through? And towards the end of the last acquisition I went through, embedded finance, self-financing was what everybody else is interested in. A lot of platforms out there doesn't have those layers built in. And those layers are basically how to manage your branch, how to manage your merchant, right? Before that merchant faces the customer. Lots of these people, they still don't have those layers built in. How to control products, underwriting, pricing at that level of detail, so you can face the world. So that's what we want. And if I look back to all of the clients that we have, they're all doing some forms of point of sale financing. Today we call them embedded. Yesterday we called them BNPL, buy now pay later.
Yeah.
And within that space is very crowded as well, right? Because a lot of people build it on their own. There's some people who are sort of jury-rig their system to kind of do it that way. So we found ourselves in this kind of an interesting in-store point of sale financing situation. So I'm going to talk about one of the retailers we kind of launched. And if I look at this space in BNPL, there's a firm, Klarna, Sezzle, Snap Money. There's a bunch of
Afterpay,
4 or 5 big players.
Yeah.
All the meme buttons, right? All the checkout pages, like 12 of them now.
Yeah.
But those are all, majority of the time, they're all online. One-click checkout. That's what everybody else is trying to even adapt to, right?
And I was just looking into this because we did a piece on our news pod because the Apple news. We can talk about that a little bit. But Apple's making it really easy to do buy now, pay later on any credit card transaction.
Oh, right. Okay.
So we'll talk about that a little bit.
Yeah.
But it's
You just
smart
on the card.
because, so when you pay at a retailer, you're buying a computer,
right.
whatever, it actually asks you straight out, is this a pay in full or a buy now, pay later? So they're migrating buy now, pay later to the physical world. But you mentioned online versus offline. Offline's where all the action is. It's 87% of commerce. Online, people think online's everything. It's 13% of dollars spent. So you're focused in the right place.
Yes, I was writing a blog about this, and I did some research, and you're absolutely right. I was going to cite the same number. According to the American Retail Federation, 2025, you're absolutely 80% plus of all the commerce or retail spending are happening in the stores. Right. These big retail guys invest $1 billion for the state, and they want foot traffic. Right, a couple of years ago when Apple was talking about their stores, right? They're talking about this concept of millions of dollars per square foot, right? They were trying to get people in there, keep on shopping, whatever it takes, not one-click checkout.
Right.
So what I'm finding, all of these big players, they have their space, right, in the e-commerce space, but everybody's forgetting there are lots of things to do inside a retail store. You really got to listen to these guys and say, what is it you want to do to cater to that person walking into the store that may spend 5 to 8 minutes browsing your shelf. So we found ourselves in an interesting wedge, and one of the big retailers just got to email us. We want to talk about content there.
Yeah.
We don't do it. We don't have any sales stage. They just found us, email us and say, "Hey Tim."
Big retail found you on LinkedIn?
On Google.
Google.
Just emailed us.
Do you know what they were searching for?
I don't know, but I'm gonna go back and ask. Right, we were just
okay, because somehow you landed organic.
We didn't know this. We didn't know there was a need. We were just going after the same kind of banks and credit unions, right? And so we want to deploy a in-store point-of-sale financing system in all of our stores. Like, who are you, right? There's this Luxottica, which is an Italian company, and their retail division reach out to us. Well, we want to build our own branded BNPL platform
in physical stores, not online, or both.
Online, they've got those buttons.
They had that sorted. Okay.
Sorted.
They can call a firm and put it in.
You put it in, put a button, right? I think there's, they do a lot of business there.
Does a firm not offer the in-store solution?
They do, but here's the difference, right? And if you're a firm, please forgive me. I'm just, making assumptions here. I feel like they're taking the same approach online into the stores, right? It's just a button on the machine, sell, and tell them you can pay it for, right? So they focus on that transaction.
Transaction. Yeah.
They didn't focus on the shopping experience.
Got it.
Right.
What was missing? What were some of the things that they didn't fully
couple
work
of
through?
Things. They want that customer to be in that, they being the Luxottica right there. Basically, Sunglass Hut. They have like 1,200 stores, 9,900 independent stores, 100 buildings, and Macy's.
Actually, and one thing you mentioned over lunch, I think is relevant here. These aren't your $50 pair of sunglasses. Yeah. These are like the wearables now people are buying.
I think they bet their future on AI glasses. They call it AI glasses, but it's Meta Ray-Bans. They own Ray-Ban as well. But these Meta Ray-Bans are flying off the shelf, and
we're talking $900, $1,000,
$900, $1,200. They're really quality stuff. I mean, I saw some footage. I don't have one, but when we did the in-store installs, all my engineers walked away with one. I feel like, I haven't seen it.
Okay, I haven't yet either. But I'm taken back to like the Google Glass days, like 12 years
really
ago.
Good.
I'm sure it's
4K, full
100 times better. Yeah,
and it has like all sorts of internet capability built into it. You might go to another installation. I'll grab it. Okay. So inside the store, they want people to do one click checkout. They want them to spend their time there, shop. Don't get one pair, maybe two, right? Instead of Ray-Ban, right? Go get AI glasses, right? Easier on the wallet. So they see the powers of this buy now, pay later, will pay over time, but they want to build a different experience. I'll give you a couple of points. They have this royalty program, Sun Club. They also have an insurance product called Sun Love. I don't call these names. They do. I thought walk in and give these things, right? For them to build all of these accessories, esoterics, insurance products into a firm style checkout, it's almost impossible, right? A firm is like us or other way.
Yeah,
my way. So this particular retail.
Oh, so they want a certain level of customization that's just not offered out of the box.
100%.
Okay.
And they call it Sunglass Hut Plus, right? Just like Disney Plus. So it's on brand. There's more trust, and they can sell or cross-sell additional insurance products or let them join their Sun Club to collect points. So some of these curated experience sounds simple to do, but if you go to a well-established BNPL online player, it's like we can't fork code.
They're just solving for the transaction. They're not solving for loyalty and all this other stuff.
We're not solving for any of that stuff, right? So, and in addition, they want to cross-sell. They want to upsell. Instead of one pair, get two pairs. You can afford it, right? The affordability index is high now
Because you didn't realize that you could pay
pay
for
over
it.
time.
Yeah.
That's right.
Is
So
it with zero interest or
zero interest.
Okay. Really?
Well, I believe, right? Margin on these things are pretty high. They've been pretty made somewhere in the world. Put a loan on it, it's like 10 times of
Sure, high margin. So 0% interest makes sense. Are they the capital provider for the loans?
Yeah. So what it turned out to be is that it's cheaper from the finances themselves than to borrow money to finance. And what that really means is that they're just balance sheeting everything on their own.
They are. Okay.
I feel like they collect a couple of payments.
So they're licensed lender as well?
Yeah. So we actually help them with that. We have lending licenses in all 50 states, and I think in all 50 states, we're helping them go.
So you help them get the license, or they're using your license?
We have our own.
Oh.
So I have a sister company that's lending, and we have all of the lending licenses, and we're helping to get them into Canada, Puerto Rico as well.
So if I was a merchant, let's say I opened up a store here in DC, sell whatever. I don't know what's fun. I'm into guitars.
Guitars.
Guitar shop. Yeah. All right, and it's high. I wanted something high ticket. Average guitars, $2,000. That's usually a barrier for people. $2,000. How am I funding the money? If I can pay in 4 on 0%, okay. Do I have 500 to make the first payment? Cool, I can get the guitar. So you're telling me if I was that merchant, you could get me licensed and set up, and I don't have to do anything? Yeah. What would I have to do as the merchant to get ready?
If you own the inventory and you can afford to finance on your own, or just keep your own balance sheet, nothing. We have all the technology. We have all the licensing. If you're a single state, it's easy, right? If you're in multiple states, we can help you with that as well.
Do I need like a new terminal in my store to access? So how does this come through?
Okay, so let's talk about the installation, right? So if you have a POS machine, we can integrate into a POS machine if that's what you want. But sometimes people walk around the store. So what we have done is it's just a web experience. An iPad experience for your store manager. You can iPad or right. You can we'll do an inventory kind of a list, integration, or we just list your inventory in our system, make a model, all that stuff. You help that shopper shop. You chase them around the store, basically, right? Hey, is this what you want? We're gonna send them a QR code or a SMS text message. They click on their phone, bring up the promissory note, bring up the bill.
So they can cool.
Cassette, e-sign. Take a picture of
I do it on the tablet as well in the store?
You can do it on your phone. And then consent, and we'll take the first payment method. Could be a debit card, credit card, or a ACH account if you remember your account number. And we process the first payment, we verify everything, and then they can walk out of the store. We will process remaining 3 payments or 11 payments, however that is, on a monthly basis going forward.
Okay, so it's monthly. That was gonna be my next question: is what are the payments? So it sounds like I'm either on 4 payments over 4 months or 12 over a year.
Yep, this is not a payday loan where you have to key it off of your payroll date. It's just a monthly payment on the day that sign your promissory.
Have you seen enough data to know like payback rates, things like that?
Can't really talk about that retailer specifically. And that's the other thing, right? That's the other thing why they want to go and do it on their own, because some of these named big BNPL players, they would change the approval rate without telling any of the retailers. So they're used to a 50%, which is low to begin with, right, for 6-7 months, and all of a sudden there's some issue with their payback, charge-off rate, and all of a sudden they shrink that to 40. So the amount of embarrassment
without communicating to the merchant, it just happens.
They do it for the store owner, they do it for all the.
So as the merchant, I'm learning after the fact that
exactly
my approval rate just dropped. I see.
So for these retailers, the first thing they will tell you is, hey, Tim, we want a high approval rate, 80-90% approval rate. I feel like they care, but they don't really care about default rates because they make all their money on their higher margin business, cross-sell, right? 80% of people are going to pay the 20% of people's bill.
Yeah.
But if you do something like that, you have to go lowering credit. You got to welcome more Gen Zs, alphas, and NTCs, new to credit people, right? So they're not really responsible, but if you coast enough, you'll get another payment out of them. But I think for a lot of these consumer goods, like Sephora, for example, right, the makeup store, if you make the first payment, I think the hard cost is covered because it probably 80 cents to make a stick, and you put a logo on, it's $20.
So they're kind of in the money on just the first one. So they can take heavy losses and still.
Yeah. I joke with them. It's like you're in the plastic business or in the chemical business, basically, right? You used to make them into lipsticks and whatever. And by the way, Sephora is owned by Louis Vuitton. talking to those guys.
Also, I think I had my answer then on my next question, which was going to be, how sophisticated is the underwriting? Are they doing cash flow? Are they doing like, it's
Zero
pretty straight.
friction.
Okay.
Full credit. If
So like
if there's
FICO only, something
there's
like that.
pulse, give it to them because they have to make the first payment before they walk out of the store.
You're collecting what, 25% of the payment right there.
Well, for
the pay in fours at least.
pay in four at least, right? So, but sometimes they do a 12/24 payment just to make that feels like a Netflix subscription. In fact, what they want to do is it's this: make it into a subscription, 12 to 30, 25 kind of a range, right? Dollar per month. And it has everything to do with their insurance product. Just like Apple Care. If you break it, lose, or stolen or whatever it might be, come back every 12 months. We'll give you a new pair.
Oh, I see.
Right.
So you want to incentivize the monthlies.
Right. So it's just a wallet share. I learned this from Capital One. Capital One program, right? So just say, hey, I'm going to reserve $20 a month for the latest fashion accessories, namely sunglasses, right? So I feel like they want to just make that into a subscription in that way. It is a term loan, but if they could just keep coming in, pay us $20 a month or $3 a month, grab anything off the shelf every so often, they're in the money.
So if I paid 20 or 30 a month, I could come in and get the latest version.
You could
trade in.
I think you can sort of some kind of refinance or something like that, trade it in, or the insurance product actually covers the whole thing. You break it, lose it, or something like that, you can use it.
Let's take a quick break in the action here, because I'd like to introduce you to our newest sponsor, Fintel Connect. They're an affiliate marketing platform that can help connect you to publishers, influencers, and manage your compliance. I'd love for you to check them out. You can find them at fintelconnect.com, FINTEL connect.com, where you can connect directly with their founder and CRO. So they're going the direction I was thinking cell phones, but I have an Android, but like Verizon does that. I actually don't think you can even buy the phone in full anymore. It's like, I used to always do that, and now they just added a monthly to your bill, and it's no interest. So like, it's almost irrational to not go.
And then every 12 months, 18 months, you can come here and do a free upgrade.
Yeah, exactly.
Yeah, that's right.
Yeah, they just want you paying the $30
That's right.
for the rest of the time.
Yeah, they do it anyway, right? So, we also see that some of these retailers are getting into like technology as well, right? So they're betting all their future on AI wearables or wearables themselves. They spend a lot of money doing the research with tech companies to make retail, or at least their products, sexier, going forward, which requires a different type of financing. So approval rate's got to be higher. It's got to be on brand to bring that trust. They want to add all these esoterics, accessories to the whole experience. So they want the whole experience. Every 5 minutes, somebody finding something in their stores. I get an email every time there's a financing action. So for all those reasons, I feel like larger retailers are probably thinking about, we probably need to do this on our own. If you think about it, if you're shopping in the brand that you like, and all of a sudden they shows you like a different brand, oh yeah, you gotta fill out this application with a different lender. I'm like, oh shoot, what am I doing here? So it already creates a little bit of disconnect. But if it's a Sephora and it's a Sephora Plus subscription, hey, just pay us $20 a month. You can come in every six weeks or whatever you were. Just pick another one. It makes it for a wallet for a lot of people. So I think there might be, I'm hoping for it, because I'm in the business of giving them software to do it, to do that. But to answer your earlier question, if the retailer or merchant can put this on their balance sheet, they don't even need to raise money, because we have all this done, right? So, and if it's a B2B kind of a setup, you don't even need a license to do it. If you're offering a service to do another business, it's just going to be a business.
Oh, you don't need a lending license?
You don't need a lending license to do business lending. It's just a B2B contract. Some lenders choose to, but in America, they don't regulate interstate commerce. So you could be selling,
as long as you're selling to a business entity, an LLC, a C corp.
Some for our business, right? It could be just a kind of a payment plan. It's a B2B contract. It's not. Yeah, you don't need commercial loans. No. Some people choose to have it because what they want to do is that they want to default that into a like a personally guaranteed kind of thing. But if it's just straight up B2B, it's just your boys financing the other way around.
What else is LendAPI building? So we have this whole like point of sale let's call it offline, buy now, pay later. Yeah, in store. What are the other areas you guys are focused
Actual
these days?
extension is still more BNPL, point of sale financing. We just launched our Indirect Auto platform. So we're plugged into RouteOne, DealerTrack. If you walk
I saw
into
that on your LinkedIn recently, actually. That's cool. And
how
I
it's
have an auto refi background, so
okay, good. That's very possible.
RouteOne, and that meant something to me when you said it. I was like,
RouteOne,
oh, that's
yeah,
those are the big
yeah.
players.
You stood up.
Yeah,
So when I
no,
mentioned
I was like,
you
oh,
stood up.
that's cool.
So we got certified on RouteOne DealerTrack. Our name is on their website now as one of the recommended OSs. We have all their latest APIs, contracting, policy, credit, all that stuff is integrated. So if you walk into the store, for everybody else that don't know Indirect Lending, you walk into the dealership, you like the car you want. It could be selling Toyotas, Hondas, whatever it might be, right? And then the finance department manager will punch out stuff in his or her computer. Usually they're using one of the three or one of two. I'll finance POSs, right? Could be DealerTrack. I just learned.
And they're usually like the big banks are behind them.
Big banks where, RouteOne, for example, is put together by all the auto dealers, auto manufacturers, Toyota.
Yeah. They have their own native.
And it became like an industry standard. So that system fans out. In our earlier podcast, we talked about affiliate on my podcast. It's like a little private lending tree. So they'll fan this out to whomever, bank, credit unions, and wants to finance this auto. A lot of people meet credit unions that way.
Yeah.
So they offer great rates. So for that system to bounce information to the credit unions, they need a LOS, loan origination system, which is us. So we built all these integration with these POS systems, and we can pull in data from Kelley Blue Book, Black Book, vehicle database, JD Powers, all that stuff that size up the value of the car with the number and all that stuff, and do the calculation, and then punch that offer from, say, Suncoast Credit Union back to that terminal. Oh, you got qualified for a 3.99% APR, whatever down payment, and you can sign right here. So that is to us in-store financing.
Yeah.
Right. A lot of people, so that's Indirect Auto, but generically speaking, that's just another form to be
different application. Yeah.
7 years now, right? Some of these car loans are 7-9 years now. Just keep the lower.
So what would be the reason a dealer would come to you to get more offers? Because I presume they have trusted relationships with all sorts, many of the big guys.
Suncoast Credit Union might come to us and say, you know what, Terry, we are tired of our really bank. We can't do anything with those guys. They're stuck. I need a new LOS to interface with all these dealerships because I need a system to do.
Oh, because they want to rip out the old technology, put something new.
Yep. I was on a call this morning with a credit union. They said, hey, we are stuck with so-and-so because they couldn't change anything for our commercial vehicle.
So these are folks already getting in deals. Okay, they're already in.
Right.
Okay.
System doesn't work.
So this doesn't become a way in to the dealers. This just becomes a more efficient way to do business.
I'll explain some of the other upstarts, right? So usually it's like old systems don't work anymore. These POSs have developed brand new technology that can do back and forth on the contracting. My LOS, old LOS doesn't support that. They don't want to integrate it. I'm like, they still want for you to do paperwork, right?
Yeah.
So we have all that stuff integrated. They want to rip out everything out, and they want to use brand new systems, the AAs with the POS system back and forth, all with the e-sign, right? Don't bug our people and then fax things over. Yeah. We all experienced that before. The first one is clean. The second is like, let's see. So you start to negotiate. Oh, hold on. Let me call my guy at the local whatever credit union. Give me 30 minutes, right? It takes a whole day to be in the dealership. But there are organizations that says, we want to actually start indirect auto lending, because that's a really short way of bulking up your portfolio, right? 10 billion to like 20 billion or maybe. So in that instance, they want to shop for LOS. They want to make sure the LOS connect to all the POS machines with all the latest technology. They will have a relationship with the dealership. They'll say, hey, I'm going to finance your dealership. They being the bank. Is it okay if I turn you on in DealerTrack or RouteOne? Right. And DealerTrack knows, okay, well, which LOS do you use? LendAPI, great.
Cool.
So usually is the financing partner that requires.
Okay, so for you to open this up, you had to get RouteOne and DealerTrack comfortable.
To get
that was certified. The hard work. That was the hard part.
We paid them more money to get it integrated, right? Now we're ready. So credit unions, whoever, right? Because say, I'm going to use this new rail to originate more.
And what's differentiated about your rail versus Meridian Link or one of the incumbents?
If you change a field, it takes 9 months to do it. You got to pay them $60 grand. It's not so.
Why does it take 9 months?
It's because they didn't build it in a sort of
Built in a different era.
Yeah, I'm not name it, but in some of these platforms, if you change the field, they have to build a whole version of the software.
So this sounds like a lot of tech debt.
500-600, different versions of this stuff. Every time we release something, it breaks everything else because it is impossible to test and host everything. And then plus, there's so much overhead and infrastructure. To change something, you have to pay 50-60 grand just to collect the requirements. You can go into our system and move the fields around and grant a new version on your own. So the total cost of ownership is zero with our platform. And you can
so
make
then how do
changes.
you all make money?
Well, it's just a platform fee. What I mean is that the
On
amount
margins.
of hourly rates you have to pay for your incumbent and wait and lose all that business, it's meaningless with our little smidgen of a platform fee. So it's just quick to market. You can change a lot of different things.
Is there a per transaction fee on top, or just
There's a transaction fee because every time you bring it, and depending on if they want to use
data costs.
Exactly, data costs is all what, right? You can buy data through us and all that stuff. So it's just a new way of launching products, an easy way to control your own destiny. You can make changes on your own. There's no delays, and you can go to market quickly. And the biggest tech solve is for us to deeply integrate it with the two most used POSs out there. So that part is solved. You just have to turn on that dealership and let them know, hey, we're going to be one of the 5 on your waterfall.
One of the things you talked about last year, I'm curious if it's still a focus area for you, is enabling anyone to be a lender. Any Joe Schmo that wants to do a little card or a little, I guess personal loan might have been the example. Are you still seeing customer flow there?
Yeah, our goal is we work with a lot of startups. Our goal is to give you a platform just like GoDaddy, right? 20 years ago, you and I have both done this, right? You build a website, you got to hire a webmaster, tickle HTMLs. Today, you don't even think about it. Anybody in the room can go to GoDaddy, get a domain, take a template, press a button, do a little content launch, right? We brought the same experience here, right? So anybody that has an aspiration of trying something, they can log in, we'll give them an account, and they can do it themselves.
And you can take care of licensing, technology.
That's right. The barrier of entry is zero.
Yeah. If I wanted to start a personal loan company,
is that a different conversation offline? Just kidding.
No. I'm curious just the mechanics. If I wanted to start a personal loan company in Virginia, and I wanted to keep it small and serve, I'm making this up, other small business owners in a category I understand and I feel like I have an advantage in. What would I need to do to get that going?
We have licensing technology. You just have to knock on all the pizza owners' doors because you understand pizza partners. You just have to get with all the dentists because you know all the dentists because you used to be a dentist.
I'd have to figure out distribution.
That's right.
All the other stuff.
That's right. Here's the button. Put it on your website. Here's a QR code. Put it in your store.
So underwriting, I would have to bring the capital.
Right? Underwriting, data hookup, servicing the loans, even generating the QR code.
Yeah. Do you have any kind of marketplace for capital if I wanted to get?
We talk to capital providers all the time. Hey, Tim, I know you got assets on your platform. Can you introduce? So for us to introduce, you got to have a little bit of tape, a little bit of loan tape for all the loan audience, right? You gotta run the water through the pipe a little bit, show the capital markets guys, or not even capital markets, private credit guys. There's a lot of family office. It's like, I need to borrow $5 million to turn this thing, right? So they need to a little bit of it.
And you don't have to start lending to everybody.
That's right.
You could say, look, we're going to only approve people with FICO above 720.
And the biggest secret is this, right? Merchant discount rate, MDRs. Yeah. So you will say, well, MSRP is $3,000, $300, right? And the cost is $330. So your margin is $290. Well, raw margin, but then you have your store, all the stuff. Yeah. So you have like 30% to play around with. That's your profit. So you can say, you know what? I'm gonna lend you 70 cents on the dollar. And you're good because you made your money.
Right.
Right. To protect you from defaults and to give you a little bit of margin to play around with. And plus you can, if the license in that particular state allows you to do it, you can charge a 7.99, 12.99% APR on top of it. Or you can borrow, you can do a 0% same as cash for 6 months. If you don't pay within 6 months, the interest rate, 7.99, retroactively applies to day one.
How many of these merchants do you think have point of sale financing already figured out?
Nobody.
Really?
There's 30 million small business owners in the US. Again, right? There's Affirm, there is Klarna, all these guys are generally
for the online world.
and sometimes they'll have a sticker in the store.
Okay.
But again, we talk about the experience, right? It's completely, sort of opposite of what they want to do, and there's some conflict of interest, and it's very expensive. If you look at what Klarna is charging,
Yeah, the networks the visas are charging for something like that. What are these guys?
In some instances, 3 times more expensive than Visa, MasterCard.
Yeah.
Because they say, "Oh yeah, I'll bring you more business,"
Yeah,
which is true.
I could see that being worth it for some merchants.
Yeah, which is true. But if you build your own, right, and you're basically financing yourself, because a lot of that cost is basically they're carrying on the risk, right? So if you can carry on risk yourself, we got everything else covered, especially for high margin items.
Yeah.
Like these wellness centers, right? I had a pretty big party over the weekend. These hydration rooms.
Yeah.
They put a plastic, they put a bag of sodium into your, make you feel it's 8 cents. But if you go in there and sit there for an hour for $60. Right. So what are we talking about here, right?
Super high margins.
Yeah, $12.99%, $12.99 a week kind of a thing, right? You can walk in and do 8 bags. So there's a lot of so to answer your question, a lot of people haven't figured it out because they haven't been exposed to the technology is already there. We've sort of commoditized it, genericized it, and the ability to lend. It's the lending as a service, the banking as a service thing that's been figured out as well.
Yeah.
Right, especially for these high margin services, high margin products. If you can take a down payment, and sometimes the down payment could be 30%. It doesn't have to be 1/12 or 1/4. Just cover your cost. Then the remaining of it could just be a payment plan or a subscription plan.
So with you mentioned the incumbents, the Klarnas, the Affirms, the Afterpays are sometimes 3 times higher than the visas. Do you guys take any fee off the top when you work with your partners?
We have a platform fee, we're a transaction fee, but it's not a portion of the sale, right? Because we want to just be a little bit different. It's probably just per application.
Okay, got it. Okay.
Yeah, we're trying to work with again, there's 30 million small businesses out there. Probably 5 or 6 are active. We're trying to work with everybody. Of course, right? These 1,000 store retail brands, requires a whole different way of catering to them, right? So we're gonna have to set teams over there from time to time. To take recommendations and things like that. But that's they have a resource to deploy.
Got it.
Yeah.
Let's change gears. You're one of the founders I see out there in LinkedIn. One of them, very active. You have a newsletter. You have a podcast. When did you start creating content, and what purpose does it serve in your business?
Yeah, so I started LendAPI 2 years ago. We just finished our 2nd year anniversary, March 1st. This is our 3rd year officially.
Okay.
When we first started, we have the domain lendapi.com, and I'm like, how do I get people to show up, to lendapi.com, right? I can see what I need to say on LinkedIn or social media, right? That's just high time. But how people just organically go there? You gotta pay a lot of money to do SEO, SEM, and all that stuff, right? SEM, SEO as well. Or you could just do yourself. This is a do-yourself platform. Why can I, Visa, MasterCard figured it out 20, 30 years ago, right? And some of the people I respect have, launched their stuff out 60 years ago. Nobody does way. What is, 7 years ago, Carta.com. What is that? So I said, I'm going to learn it. So every day, my commute is about 15 minutes, and I'll just do a random search on YouTube.
Yeah.
Content, SEO, basically. How does SEO work?
Okay.
How do I drive traffic?
So you listen to a pod or a video?
Yep. And every single one of them is like, use my service. Every single one of them, you got to pay. Every single one, I'll download my ebook, right? You kind of know what's going on. I'm like, and there's a couple that's kind of cool, right? Oh, you got to write and your consistency, 1,000 words, write this for Google or right? And then you got to, most of them are like for people that it's already in the business, already writing content. How do we do a little bit better? I'm like, God, I have nothing. I have zero.
So this was 2 years ago. When you started the companies, when you started your social.
Listening content.
So pre-LendAPI, you were not active in content.
I'm active on LinkedIn, but for just as a professor, as a teacher, and I did a couple of things, right?
Got it.
I started LinkedIn like 20 years ago, like 2006.
Sure. Me too. But I was just like browsing. I had a profile,
Yeah.
but I wasn't writing.
Yeah.
I wasn't publishing.
So prior to LendAPI, I was doing like fintech prediction, of 2025, for what it's worth. And I'll put it on crowdfundinsider.com as a guest post. Did some of that, right? I meet a lot of people.
And was that generating business for you in any way, or was that just
days? It was basically a personal brand building kind of an exercise, right? So
Yeah.
here is like a whole company, right? I don't want to build a personality called.
Right.
So anyways, back to this. And one day I was going to work, and this guy said, I'm going to show you blah, 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 this and that. This is very graphical, right? Very emotional. I want to show. And then he said, what if you guys starting from nothing?
So your ears perked up there.
Yeah, I'm like, say what? This is it. I'm away from this. And all he said was, you need to become the source of information. Cussing. That was it. I'm like, what source?
Yeah.
What is the source? Then I thought about my business, LendAPI, but the name itself kind of self-explanatory. For me to do what I need to do, for my clients to do what they need to do, they need to be connected to just about everybody under the sun, all the bureaus, all the plans of the world, right? All of the KYC, KYP,
Yeah.
right? I'm like, that's it. I'm gonna be the source for all the stuff.
You're the connector.
Right. So I started LendAPI Marketplace, where I beg and plead everybody and say, hey, would you like to list yourself on the marketplace? So I'm sort of writing on their keywords a little bit, right?
Yeah.
So if you look at American FinTech Council,
so a different brand that's bigger than yours can get you some domain authority.
Search SentiLink, my name shows out as well.
Got it.
Right? Maybe on page 3 or 4.
No, I got here. Yeah.
But that's how I benefit as well, because I oftentimes I don't remember all the people I work with, or clients will say, well, who's really good in KYC? Okay, go to our marketplace, click up KYC, everybody's listed there. You can actually contact the person directly. Oh, great.
That's smart.
And some BDC will actually tweeted about this about a year ago. Hey, I found a new source of deals. LendAPI Marketplace, because they update it every week, and all these new companies that I haven't cultivated, they're there. So
the lenders are there too.
Yeah, well, the VCs are looking for listing lenders now. VCs are looking for a new source of deal flow, and if you see Marketplace, because we list a lot of really cool
so things they may want to fund.
They want to fund, right? They want to invest in. So that was interesting. I'm like,
how many partners now? You're like at several hundred, right?
300 plus on our.
And I feel like every time you have one, you share it,
post it, right? Because that's our part of the bargain, right?
Yeah.
Because there are some that are really cool, right? Upstart, they want some notoriety. Yeah. Well, so what's happening today is that people are coming to us. Hey, Tim, why am I not on your marketplace, right? So from that day, about a year and a half ago to now, we still have an option we haven't listed. We just ran out of time. The problems are we didn't get listed. And it's a free service. We just list everybody. But I'm writing on their keywords. But now they're writing on our keywords. Right? So, and then the other thing I did was we gotta be authoritative. Every day, we come in the morning, I'll ask myself, Tim, who gave you the license to build this software? To run people's lending operation? This is not Slack versus Google Meet. Right, this is their operating system. If you're a lender, that's the only thing you need. It's secure business, right? So there's no room for error. So I gotta be authoritative in all things. We're gonna just talk about points off why BNPL, why this is better, right? Without being too salesy, how this, right? So I started forcing myself. My wife has to do this on weekends. I'll go to Starbucks. I'll wake up super early in the morning.
Yeah.
I'll go to Starbucks and train myself to write a 3,000 word essay. BNPL, Indirect Auto, whatever's top of my mind, in 45 to 55 minutes. And I write it now specific for LLM. I'll start with, what is Indirect Auto? These bigger questions that people are searching for. And I'll get into details about some.
And then you post it on your domain. Yeah.
I'll do Google Search Console and all that stuff.
But also Substack, also LinkedIn, or
I used to have Substack, but it was work for LinkedIn, right? To amplify a little bit X as well. So now our website gets about 3,000 to 4,000 visits a day. People just looking for random shit.
I want to pause here for a second to tell you about one of our sponsors, Spinwheel. They've built an API that streamlines your lending application form with just 2 fields. When a customer shares just their birth date and phone number, they can go grab all the information needed to pre-fill their application form. So regardless of what channel you play in, you know that the higher the application rate goes, the lower your cost of acquisition becomes, and the more media you can buy to generate growth. Additionally, they can give you real-time verified consumer credit data and seamless payment processing, which can help you serve customers beyond the initial application. To see a demo, go to spinwheel.io or check out the link in the show notes. It'll hook you up straight with their head of growth. But all industry, niche stuff.
All industry. If you're looking for BNPL, and we ask people, we don't have any sales team, right? People just come to our website and requesting demos, send us email, hey, we need this and that. There's these big name banks.
Yeah.
We ask them, how did you find this? Oh, Gemini. Oh, ChatGPT. I was like, what did you do? Remember what you typed in?
Yeah.
Oh, the most flexible LOS under the sun.
God.
And let's see this. But it took a year. I want to say it
was
took
SEO.
about 2 years.
That's an SEO play.
SEO.
Yeah.
It took 2 years to build it to the point where people, or at least Google or whatever search engine, thinks that you're an authoritative place for this type of stuff. Because we actually talk about real stuff. I didn't hire anybody to write LOS, which only have service level understanding.
Right.
I will write like real.
So these sessions at Starbucks, is it you and researching through Gemini, or just are you just you?
I intentionally do not use anything.
Okay.
Because it knows. I don't use any of that. I don't even use Gemini or whatever to give me ideas. I just sit on it, right? I know there are 5 sections I need to do.
Because you're in it and you're just, what would someone find helpful that's searching this?
Because the stuff that I'm writing happened yesterday. I'm like, this is exactly why people are telling me that's right. So that shows up. I wouldn't even use any of the tools kind of check my grammar. Nor check solid. So it's raw, it's real. And put it out.
So you write and you publish.
Write, publish, get people to start indexing it, and they pick it up as soon as I publish it. It picks it up.
So no ghostwriters, no brand strategy. This is you unfiltered publishing.
Our website is written by me.
That's crazy. And you say that in an hour you can publish 3,000 words.
45 minutes, I'll do a 2,500, 3,000 word.
Yeah, that's a lot.
Yeah. And it's every week. So I do 2 a week.
Yeah.
I'll think of an idea during the week, and I'll work with our our graphic designer and Dima to come up with like 4 or 5 different images that I want to present. And because I already know what kind of section I want to write, just content, image, content, and then another section, content, image, content, and get it out there.
What purpose does LinkedIn serve in your strategy?
Just the amplification for
so the pieces you wrote on the blog, you're going to share on LinkedIn as well. Yeah.
That's it. And then plus other things like, other type of videos, pictures, all that stuff, right? When you just hunt a bunch of selfies on the area. It's just a way to amplify it. It's just a way to tell people, hey, we have this now.
We're here.
Thanks.
We're a business.
Right?
Yeah.
We're not on Instagram or TikTok or anything like that. This all the decision makers that are there. And I'll get feedback. Sometimes people will actually comment on it, where sometimes you will send me direct mail. That's right, direct mail. Direct message on what they thought about it, and that gives me a lot of comfort because that will give me an idea. Right, the next episode of Consolidations of what I just broke.
Do you get direct clients sourced on LinkedIn?
All the time. All the time. They'll send me a DM. Hey Tim.
Yeah.
We need to build a commercial living platform. All the time. That's my source of.
Is it the number one source of business, or?
Number one is probably our website. Our website, 100%. That's our.
Is there a form where I can fill out? Okay. Like, can I book a meeting with you, or?
Yes, it goes right into our HubSpot. It goes right into our calendar. And we will have a sales team like maybe in a month or so.
You don't have a sales team right now?
So it's all inbound. 100% inbound today.
Who takes the calls?
I do. And Eric, my chief of staff, takes the call.
Wow.
Yeah. So I do. I show up in DC, talk to the credit communities. I show up on this podcast, get the word out. It's just it's all inbound.
What percentage of your time is, just give me a guess, content? Podcast, LinkedIn, blogging.
I'm going to say something crazy.
Yeah.
I want to say 100% of my time is content.
That is a crazy thing.
Yeah.
That is a crazy thing to say. Same comment more on that.
Yeah, because if I'm not doing this or writing, I'm thinking about what I need to do next. Because somebody last couple of weeks ago, a dear friend of mine, he's runs sales now for a big company, one of our partners. He says, Tim, if you do marketing correctly, you don't need to go hunt. I'm like, you're absolutely right. So
business finds you.
Yes, exactly. So if I do my job correctly as a CEO of this company, well, one facet of marketing, marketing, right?
Yeah.
People's gonna come and say, well, I'm just curious what you built. You said this, I want to see it.
Yeah.
Right. So you don't need to go at cold call for show up. You'll show up, just say, hey, we're here. So that really and he just told me about that 2 weeks ago. I'm like, yeah, that's what I'm doing. If I do correct marketing, get the word out, my sales team doesn't have to do outbound. They just have to fill inbound, which we get. Yeah, every hour there's someone wants to talk to us, and we're selective.
Yeah, no, that's great.
So just a lot of inbound. But it took years. I want to say 2 is a magical time, but you got to be consistent. Now I sound like one of the YouTube videos that I listen to.
But because that's the answer. Yeah,
stick to it. Yeah. I'm gonna do it every week. Here's a format.
Yeah.
All right. I'm not gonna confuse any algorithm. No. Here's what we do. Yeah. And it's not artificially produced. It's just a day-to-day, knocked down, dragged out conversation we have with our clients. All generalize it and turn into a piece that people will look at and say, you know what? Thank you. I'm not going to make that mistake, or thank you. This is actually going to be beneficial for a lot of you.
So your approach is give value.
Absolutely.
Educate.
Absolutely.
How much of your strategy is entertain versus educate? Are you pretty much in the education?
All on the education side.
Got it.
I think we all have a little bit of sense of humor, I think. Yeah. Right. So we'll sprinkle in some of that stuff in our pods.
Right? Sure.
But it's all education, because there's, I haven't done enough of my work to make sure the technology and some of the compliances, barrier to entry is lower to 0. Right now it's all knowledge. Yeah. Right. Just like you have your new market growth, that's where you toaster, right? Is knowledge. Are you giving out knowledge? Even if that person doesn't use you, they wouldn't remember you.
Right. And they might recommend you to a friend.
Exactly. Yeah. Right. I'm good. You're good. We just disseminate some knowledge.
Just give. Right. And give and let it work its way through the ecosystem.
Exactly. Yeah. And it's all coming back to you in a harmonic way.
I mean, it works for me. Yeah, exactly. It works for me. And I'm nodding my head listening to you, because the only play I don't run is your SEO play, but I'm kind of sitting here like taking mental notes. Yeah. My play is LinkedIn. It's newsletters, it's podcasts, and it's all educational. And yeah, it works.
Pod is great because the LLMs actually go through this transcript.
I'm hearing, it indexes well.
All that stuff.
Are you putting out YouTubes on all your pods?
Our pod is distributed on YouTube, our YouTube channel.
Because I hear YouTube indexes better than almost anything.
Yeah, it's on YouTube, Spotify, Apple Podcasts, basically all the popular stuff out there. Everything from the process flow.
And is it video and audio, or just audio?
Video, audio, transcription.
Everything.
We just raw dogging it. We don't edit anything. It's just one take.
It is what it is.
Yeah, I just go and prep my guest for 5 seconds and just go hit record. And it's all people that I know, and I know they're experts in their field.
Yeah.
So I'll ask them deep questions. Sometimes I'll ask them really sharp questions about, for example, I had my guest on a couple of days ago. I asked her, that ACH was working for 6 hours. What are they?
What's the deal? Yeah.
She knows exactly what to say because she experienced that. Isn't that crazy? You can't get this kind of information anymore.
No, it does. I mean, that's why I started my pod, is because the information of how to run affiliate marketing for lending, it's absent on the internet.
There's 5 people that did that job.
And the content out there, it's my stuff where I recorded probably 15 hours long form on a podcast. There's my stuff, and then there's like what I'll call shiny marketing material, which is like other agencies that do what I do, but it's written more to sell than it is to educate, and people can tell the difference. That's it. I get criticized by some of the folks I work with that I need more call to action. I need more offers. I'm just like, you know what? People still find me somehow. So I post my email on my LinkedIn. I'm tempted to post my cell phone. I haven't gone that extra step yet. I might. That's the thing. I might just get a number that's
14 minutes into a 30-minute podcast, you don't need cost to action. They know they met you.
Yeah. Tim, this is fascinating. We could talk about content all day, but we're out of time.
We're out of time.
We're out of time. All right.
Okay.
What's the best place to? Someone heard something about either content or what you're building at LendAPI. What's the best way to reach you?
LendAPI.com, right? Take a look at our platform. We actually record a lot of our demos on our resource page, so you can watch all this stuff. I think our VC calls us like build an open company.
Yeah.
Always put it out there. Even if you don't use our platform, we'll give you a demo. You get some ideas how it helps everybody in the industry. Then there's a lot of just full processes and thinking.
On that concept of building out in the open, are you still publishing your weekend company review? I saw those a few times last year.
I killed my Substack.
Tell me why.
All of my competitors' CEOs are in there. If I kill it for them, then it wouldn't be true to what I'm trying to do. And I just don't know them enough to say, here's what I'm doing.
Got it.
So that's gone on its true. So I killed it for everybody.
Got it.
Yeah. It had a lot of viewership. A lot of people did a lot of stuff. I enjoyed doing that.
But you took it maybe a step too far.
No, there's no too far. I'll tell everybody anything, right? It started as a VC kind of an investor thing, right? And then it became I open it and privatize it like multiple times.
Got it.
Right. And then one day I saw like, there's some statistics, right?
Sure.
The competitor CEOs in there, like
reading every
time, reading Reddit 50 times. I'm like, you know what's funny? And then the next one, I said something really sharp about that company.
Because you knew it.
And then I said, you know what? This is not right. This is not the format that I want to do.
Okay.
I want to, and there's stuff in there that's not in any of the blogs, any of the other website. It's just like how I build this company.
Right. So if you want to share it, you want to feel comfortable, like everyone sees it.
Exactly. So like every day I meet people, say, oh, Tim, your Substack. I'm like, fuck it. I turn that off, and I don't do that anymore. And people enjoy it. Right? And that 0.9% people enjoy it. And 0.01% is probably in my head.
Yeah.
More than anything else. Maybe I'll bring out hack again because that is we need to do a whole episode.
Yeah.
Either on founder mental health.
That's a really good one. We can jam on that for hours. Yeah.
But I did that for my mental health. You go through 100 hours a week. You don't know what you did. So Saturday,
and now all of a sudden you see it in one email.
Sunday, I'm gonna write it, and split screen. The other screen is my calendar. Oh, I talked to this. Got it.
And then you'll remember. Oh, I need to follow up with that individual.
Just say, you know what? I appreciate myself because I did a God honest, a week of worth.
Right.
Because
you have the output to show for it. Yeah.
Otherwise, you don't remember, and I'll come on Monday. Fuck that I did last week. And you go into a spiral, a cycle of...
then you never feel like it's enough.
Well, that's a whole different episode, So I got measures of boundaries that I set in my head. But that particular Substack was my way of saying, you know what? Me and my team did all of this stuff, right? Even if we didn't get another client or meet another VC.
But you did the hard work.
We did. Yeah, we didn't fool anybody. This is hard work, and sometimes it was low of the lows. We still came through. Saturday content, Sunday was at Substack, so that was my release off.
No, that's fascinating. One idea I've been poking at personally is, and I was inspired by your Substack. But I have my different set of reasons for why I can't get into all the weeds of the build in public. There's something there about the build in public that I think personally would be very therapeutic because there's ups and downs, there's challengers. Like you're right. Like founder mental health is man. So we should do a whole show.
And there's a boundary, right? You don't want to sound egotistical or self-serving. So,
and you don't want to sound too vulnerable either, because people depend on you and
exactly that fine line, man. I've been dancing that for about a year and a half. I'm like, let me rethink this whole thing, and I'll come back to it.
Well, here's my answer. Maybe you can play with this because I've considered doing an anonymous maybe X account where I really go into it, all of it, what I'm feeling, what I'm doing, financials, everything, I just don't have to, it's not me and it's not new market growth. It's just founder, but more for myself, honestly, as therapy, but also maybe some founder sees it and like can relate and can learn. And I don't know what comes of it, but something about writing it out and putting it out there, I think. So there's something about that resonates with me, but there's a fear of like what could go wrong.
We used to have Bible study groups and fraternities for this kind of stuff, right? But you're out there in the open now.
Yeah.
You're mid-40s, mid-50s. You don't know who to talk to.
No, because no one's like feeling no one's in it with you, like what you're doing. So no, fascinating. So Tim, super fun conversation. Yeah, no, I think we should do maybe a round 2 on content, because I think there's a lot founders could learn from you on SEO in particular, but also social, because like, man, it from the outside looking in, I wouldn't have given you 100% of your time on content, but very, very active, and I have no doubt it's doing great things for your business. So yeah, thanks for joining us here today, and look forward to chatting again soon.
Washington, D.C. Thank you.
Yeah, of course. I want to take a quick break in the action here. If you want to support the show, the number one thing you can do is go to thefreetoaster.com and sign up for our newsletter. You're going to get a couple pieces per week of news, information, insights, and podcasts like the one you're listening to right now at the intersection of marketing, lending, and technology. That's our niche. We don't plan to go outside of that. It's the only publication I've seen out there on the internet that dials into this zone. So if you want to support us, sign up and share it in your favorite Slack channel. This is a quick plug here for my marketing agency. It's called New Market Growth. We do nothing but help fintech lenders accelerate their growth in affiliate marketing channels. Our services are both strategic and operational. And if you want to learn more about how we can help you, find us at newmarketgrowth.com or email me directly at carlos@newmarketgrowth.com.